the breakthroughs in stuff like the Solana Fire Dancer that's come out of jump trading basically changes the entire game for what we can do.
The Solana blockchain is a layer 1 solution originally designed to compete with Ethereum and take the blockchain space to another level. Launched in 2020, Solana has gained attention in the blockchain space and is one of the best layer 1 solutions. Solana is the native cryptocurrency of the Solana blockchain that can be used to pay transaction fees and participation on the network. Solana is among the top 10 cryptocurrencies in the world and is widely available on the most reputable exchanges. However, the volatile nature of cryptocurrency markets quickly took its toll. The 2022 bear market has not been kind to Solana, causing the Solana token's value to fall by more than 90% from its 2021 highs. In particular, the collapse of FTX, a major crypto exchange currency with deep ties to Solana, caused a sharp decline in the value of Solana. The coin lost more than 50% of its value overnight, a stark reminder of the interconnected risks within the crypto ecosystem. This event caused Solana's price to drop below $10 in late 2022, casting doubt on its future. Despite these challenges, Solana has shown resilience. The final quarter of 2023 marked a significant turnaround for the coin, pushing its price above $120 for the first time in years. This resurgence reflects not only market dynamics, but also the underlying strength and improvements within the Solana network. In today's video, we will tell you about Raoul Pal's view on Solana, as he thinks that Solana is about to change the entire game for us. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. Bitcoin serves a different purpose in this space and is easier to understand. If the narrative is important, memetics is probably the most important thing in this space. Then Bitcoin is the easiest for people to understand, as opposed to a distributed virtual computer. It's just the complexity behind it. People will start to understand things like the Ethereum narrative very soon because they will just accept that it is Bitcoin with the return, and they will love it. And the performance lets you do a lot more than you can do with Bitcoin. The entire financial market infrastructure. So it becomes a very fascinating prospect. But the reason the ETF was so big wasn't due to validation from Wall Street and others, because we don't really care about that. We've been in this space for quite a long time, and we're really keen to disrupt it. The fact that they have sided with us is that the financial markets are moving towards this new world, which is a big problem. So if we introduce the ETF, the capital behind the ETF, it's like a business deal between the TradeFi world, let's call it the fiat world, and the cryptocurrency world. This trade agreement allows the movement of capital. Now, the flow of capital means that you, those who have started new businesses, will see more of, let's say, the growth of the crypto economy, creating more revenue and more investment opportunities. And that drives the flywheel because it's really an incentive-based system, which is very smart about how cryptocurrencies work. This is an incentive system to start and grow a network because it creates the effects of Metcalfe's law. So this is a big problem. We have Cryptoland to close a very important trade deal with Fiat World. What we've done is we've all been initial investors and Series A, Series B, Series C, and Series D investors in this asset. We just made it public. This is the first $1 trillion IPO in history. What we consider a $1 trillion asset was born from the simple strength of community and the passion behind it. And now its IPO is essentially the largest IPO in history. It's a big deal from that perspective and the validation that comes with it. And it's going to spread throughout the space because then BlackRock filed for the upcoming Ethereum ETF, and there's more to come as well. So what we're doing is just creating all of these connections, all of the capacity for people to migrate from a broken old system to a new efficient and effective system. It's certainly not without its flaws, we know, but the technology and the way things work are much better. Advancements in things like Solana's Fire Dancer coming from jump swapping fundamentally change the entire game in terms of what we can do. We therefore no longer need to look for large assets capable of continuing to chain the most successful protocols with the DeFi space. When things start early, there are obviously people involved, but over time, it just becomes a decentralized ecosystem and media. This is a decentralized exchange that works incredibly well since you don't need humans in the middle. There is no help desk. There are no numbers. There is no one to call. There is nothing to configure. It's inconsistent. If you are 18 years old, you can lend anyone you want any amount of money at any interest rate. You can do pretty much whatever you want, and it's not regulated. So why is the system of borrowing and lending in financial markets necessarily something different that should be regulated? You can eat any food you want, whether it's bad for you or not. You can jump from mountains. You can do whatever you want. Why should you not be allowed to trade something that is considered financial? There is an inconsistency around this. This inconsistency is driven by the system itself, which protects itself from third parties. It's like it's very difficult to start a bank because they don't want that to happen, because it is a self-protection system. So you need to be careful when saying why DeFi shouldn't be. Rather, it is a question of why this should be. Why don't they want it? Well, because then they keep the profits. A profit system distributed among token holders. It's sacrilege. How does JP Morgan make money? They'll go to regulators all day long and say, "You've got to stop this." But really, what difference does it make? Just don't worry about it. This is how technology works. When it becomes magical, we don't even notice it. So, we think it's essential that wallets are part of it. How do wallets exist? We think the integration with the TradeFi system will also make it easier to tie all these things together. This is all still to come. As Connor says, everyone is building. Tons of money has been invested in all of this. The other thing that will be extremely important is digital identity. The whole world of AI, the whole world will experience this in the United States during the elections, and it will not be good. And very rapid regulation will be imposed on everyone in terms of AI. No one has yet had an equivalent to cryptocurrencies. It's a distributed system that you can't really touch. We will therefore need a digital identity very quickly. And it's very useful. We have seen a very good deployment in India. It wasn't on the blockchain, but the Aadhaar system reached 1.1 billion people. And then its payment system. And then this digital system enabled AML, KYC, because you set it up beforehand in a locker, essentially, and then you can go in with your fingerprint and all KYC. Almost all technologies we use are divided into regulated technologies. If we look at email or messaging, if we work for a big company, they regulate what we can use, what it looks like, what's logged and what's not. But what we use in our personal lives can be very different. And we don't think it's much different here. It's like if we want to operate in the commercial system or the fiat world, we have to comply with the regulations. If we want to store money ourselves on our own accounting device outside of the system, we can do that too. Gold works the same way. There's no reason why we can't have this duality of systems. So even though most activity takes place within the regulated space, the beauty of cryptocurrencies is that we can operate outside of it. This is also the point of gold, when nothing else works in the same way. This is not the case with stock markets. No other investment market offers bearer instruments. There are only two. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.